We are Bob Morris and Robert Marson are here with me. Bob, you were just telling me it feels like it's like the Groundhog Day.
Yes,
Tell me more.
exactly. Exactly. It seems like Groundhog Day. We keep kicking this can down the road, hoping that there's some deal with Iran to end this war, but there's no regime change, and it appears less and less likely by the day that there will be any regime change as the Trump administration continues to talk about perhaps resuming peace talks with the current regime again here in days, perhaps. In the meantime, the Strait of Hormuz, not much is flowing through it, even though the U.S. has a blockade there. It's not much oil is flowing through the Strait of Hormuz. But in the meantime, there are no missiles flying, at least from the U.S. side of things. And, hope springs eternal. We'll see. But it's still something that I remain skeptical on regarding the administration being able to reach an agreement with Iran that achieves their objective of removing all their uranium, some sort of guardrails that prevents them from ever having a nuclear weapon and being able to get everything that they want. And, this is, as we've talked repeatedly, Iran's whole strategy is stall, stall, stall. In the meantime, hope that the Trump administration hits resistance either from his political opponents here in the U.S. or elsewhere around the world that sort of makes them pause and try and negotiate a deal while Iran continues to just hope that this drags on and on and on, and they don't have to give up their ambition of reaching uranium and having a nuclear weapon. So, again, I remain skeptical that there is some sort of lasting resolution anytime soon. But in the meantime, oil prices have settled down a little bit here. Settled down meaning they're not ripping up today. And where are we? We're at just looking again. I mean, we're $91 a barrel on a near month contract. So we'll see. I'm like I said, it seems like same song, verse 12. We're just holding on to the stocks. I'm not looking to sell anything here. On any expectation that oil prices will pull back sharply, but I've got my positions. I'm not chasing or buying anything here either. So we'll see how this plays out. In the meantime, natural gas prices are sort of punk here, which is weighed heavily on the natural gas names, but we're in the shoulder period and we got to wait to see how Mother Nature deals her cards here for the summer and then looking ahead to next winter. So we're just, if anything, I said last week that if there's a sharp pullback in some of these nat gas names, maybe they get more interesting. But I'm just sort of watching them here with natural gas prices being punk into the shoulder period. But otherwise, just holding steady with the names we own.
Yeah, it does seem like the beta to all this stuff has abated. I mean, front month said $91, but the S&P is back at 7,000. It's
Right,
like nothing ever even happened, right?
Right. It's like the market's okay with $90 oil. Now, if you look at it, the strip, December, January, again, we're at 75, which is where we've sort of been the whole time. This has been the near month has been bouncing around. We've been looking at 12 months at around 75. So the market's like, okay, ultimately that's where we end up. And ultimately there's some resolution and we're okay with $75 oil at the end of the year and everything goes on.
Yeah, I mean, I bet you that there's a price, and maybe you could speculate a little bit on that. What do you think the price is where it would be everyone cares a lot?
I mean, I clearly above $100 a barrel on an extended basis. If you look at it, if we saw the 27 strip or the December, January contract at over $100 a barrel, I think that would be really disconcerting for the markets and for everybody here that are investors. But the market continues to say, look, ultimately there's some resolution and oil drifts back to 75. We'll see what happens. This is a big strategic move by the Trump administration to block the Strait of Hormuz. And we'll see if oil starts flowing here shortly. And during the negotiations, during the ceasefire, maybe at some point we'll see more oil flowing out of there. Not Iranian oil, but oil from other countries that drift into the global market and help kind of steady or ease oil prices. That's sort of what the market is expecting, but we'll see here.
Yeah.
But the market, like you said, the market sort of seems to be okay with where we are for now. Like you said, the S&P.
I guess it matters where you are. Like, but it does seem to me like market doesn't care as much about $100, $90 oil. It's like, or maybe it's that the curve, right? The backwardations come in some, and the D26 really never got above 80 some bucks.
Yeah.
Right.
Did it even get to 80?
No.
I don't think so.
Yeah, I don't think it even got to 80. I think it was like 73 or something. Yeah. So
Yeah.
You got to remember, in real terms, it's still reasonably priced. I know the $4 gasoline is a theoretical pain point, but I think I posted a chart a table that showed gasoline consumption as a percentage of disposable income, and it normally runs in the mid threes, and it was down to 2.5 last year. So it's back to 3. It's back to where it normally is. It's not like people are feeling a massive, pain at the pump when they go to fill up. The media wants to hype $4.
Well, California is a little like it's $6 here in LA. Nadine sent me a picture that was $8 in Palo Alto. So in the state of California, which is a big economy, but it's always crazy out here.
It's always 30% more expensive there because your environmental regulations and restrictions. Yes.
Yeah.
This is just national average. So it went from being cheap to being normally priced as a share of income.
And it's definitely hitting consumers' pocketbooks right now. And you see a lot of dispersion in the market. You look at the consumer discretionary stocks, they've continued to drift lower here. And I think, at the lower, we've got this K-shaped economy, but clearly these higher energy prices at the pump are hitting people's wallets, especially at the lower income level that don't have any real excess discretionary cash to spend.
Yeah, well, I think the consumer is the perfect storm place to be hit, because I think people are worried about, AI type of jobs getting hit of services, and then I think the labor market hasn't been very strong. The private credit has been a source of funding into the economy in a big way. So there's a lot of things going on there, and now just a layer on oil or gasoline prices on top of it. I think it's like very much the epicenter of where you don't want to be. But having said that, like a lot of those stocks reflect it. I mean, there's a lot of stuff that's at the COVID lows or liberation lows. Yeah. Like so while the S&P sits at the highs, there is some serious damage underneath the hood in different areas, the software and crypto and that area of consumer. So anyway, Bob, anything that you're doing right now in terms of single names or anything, or just kind of like Groundhog Days, you said, kind of steady Eddie?
I'm just holding tight. I'm not writing any covered calls. I'm not writing any puts. I'm just holding on to the energy names that we own here and seeing how this plays out. So I know it sounds sort of boring, but as you say, sometimes you just don't do anything. You just hold tight and, be glad that you're up big on the energy names that you own and just sort of see how this plays out.
Yeah, it's weird because I had a really good first quarter. We took our hedges off a little bit too early, gave some back, but it's like if you're long energy, it's just kind of easy to sit and just be chill and, say, I don't know. I was talking with Robert, and I'm sure we can get into this now, yesterday and for the last couple of days. And guys, Charlie said the same thing. Like a lot of guys are kind of confused because, this has been a very sharp rally in general risk as hedges have come off.
Mm-hmm.
But I don't know. I don't really feel like I'm super excited about buying anything here. And so it's just a very weird situation. So I actually, and again, we're here trying to tell people what to do, or what we're doing, I should say. And it's just one of those times where I have an abnormal amount of guys that I are in my circle, colleagues, partners here, saying the same thing. I'm just not doing much. It's a weird spot. I mean, that's where you're feeling at, Robert?
Absolutely. It's, the 9% drawdown, I thought it was, very underwhelming compared to what the risks were in the economy and a potential for a World War III. So I didn't aggressively buy the dips. More importantly, valuations for the types of companies I like to buy had gone up, 3-4 times. So from where I was willing to pay for stocks, especially in the growth portfolio, So, when you buy a stock at 5, it goes to 25. Because it goes back to 20 doesn't mean it's a pounded table repurchase. So, everything I look at as 4, 5, 6 to 8 times sales. The stocks that are overpriced in the semiconductor space, which is one of my favorite spaces. I mean, there's companies at 20, 30, 40 times revenues. I don't know what people are thinking, So it's hard to find things that are down and cheap in this environment. And, I've already raised 30% cash in the first move up in January and February. So I'm probably not going to go to 50. So I'm just, like you, I'm hanging out. I'm befuddled by the action in the market, but I'm not willing to make bets for the sake of, making bets.
Yeah. What do we think about MLPs here, boys? Whenever I get the two of you on here, I always gotta get MLP talking.
Yeah, this is another oil show or energy show. So two of the stocks that I own, I'm circling because they did come down, a decent amount for what they are. One is MPLX, that's the Marathon midstream, and it peaked at 60 not too long ago. It's down to 54 and change, and if it gets down to 52 to 54, I would probably add some. I didn't sell any at 60 because they are in a very aggressive mode of raising their distribution. They've done 12% for a few years in a row, and they're committed to doing it next year at least. So the dividend is $1.07 now. It'll be $1.20 next year. So that's getting close to $5, $4.80. And if the stock can get down to 53, you're buying a 9% yield. So 9% yield in this environment seems, pretty solid to me. So I would think if you could buy the stock at 52, 53, down a dollar or two from where it is, not far, in a bad market, especially if oil, rolls over a little bit. When they resolve this Strait of Hormuz thing and this war thing, I would suspect the front month will go to match the 6 or 12 month strip price. So, maybe they, there's people profit taking in the pipeline companies, and I wouldn't be surprised to see that stock go down there. And, to buy a 9 to 10% dividend yield, if it went closer to 50, I think that would be a wonderful entry point. So that's on my circle list. And there's also another energy stock that's totally different that I own, and it's been an interesting stock. It's called Tetra Technologies. TTI is the ticker. I had a call with senior management last week, and they were an old school oil service company that transitioned the business over the last 5 years by getting out of some bad businesses and focusing on their growth opportunities. But TTI, I bought it I'm in around 5. It went to 12 within 3 months. I didn't sell a share because the position was only half of where I wanted to go. It pulled back after a softish quarter, maybe even a softest outlook for the year. So it's 8 and change today, and at 7 handle, I would definitely be buying it back or adding to it, building my position out, because they have, it's a small company. It's a $600 million business that's going to go to $1.2 billion in 5 years, I believe. So it'll double the business. But they have a produced water plant. They're the only company in the Texas that's running, sort of a reasonable volume through a plant. This is not benchtop type stuff. This is thousands of barrels of produced water a day. And they're in negotiations for, hundreds of thousands, if not 1 million barrels of recycling produced water from the EOGs and Chevrons and Exxons of the world right now. And that business, if they charge $1.50 or $2 a barrel a day to clean up produced water, which is a massive problem in Texas right now, $2 a barrel is a $700 million business with phenomenally high EBITDA margins. This business could totally transform the company. So I think that business, the call optionality on that business is worth a lot more than would be priced in the stock at 6 or 7, say 7. Even though at 7, it's not like it's compellingly cheap. You have to pay something for what could become a $1 billion business with 400 or 500 million dollars of EBITDA. That would be a very good business. There probably will be competition, but they're first to market. It's a bitch to treat produced water from Permian frac wells because of the chemicals, because of the salt, and they have patents on this. And they've been doing it for a long time in treating produced water. Now they just have to, get the salt out. So they have to use a desalination process that they've locked up with a couple of international providers of filters, and the business would really soar. So it's reasonably priced on today's fundamentals for 26. It got a little expensive when it got to 12, but again, in a correction, especially one with oil dropping and people just deciding to get out of energy stocks, I would be ready to buy that back at 7. So I'm very encouraged about the 3-year, 3 to 5 year opportunity in the business, at least doubling. TTI is another one. TTI.
All right. Anything else on the docket? Or else we probably call it. I feel like we got on a little late. We don't want to keep people too long.
Yep.
No, we're just watching for any tweets from Trump social media and see what happens here.
Yeah, crazy times. Crazy that I think the market being at all-time highs right now is just as crazy as if it was down 30%, to be honest.
Right. A friend of mine texted me this morning. He just shorted the stocks today, so we'll see. That would be an interesting trade.
Yeah, I mean, ASML came out with pretty good print last night, so I don't know. I think that gave some semblance of excitement, but that's very chunky and wouldn't put too much into it. All right, let's call it. That's enough. We're Wall Street Beats. Enjoy your tax day. Your government seems to be spending your money the right way. And
some of the taxes we don't send in are spending too.
Yeah. I'm Ben Bryans, Bob Morris, Robert Marson. We're Wall Street Beats. We'll be back tomorrow. Thanks, guys.
Thanks, guys.
All right, boys.